And speaking of the big tech boom, or bubble, depends on what word you want to use, in a growing sign of Facebook's global dominance, the social networking giant raised $500 million in a deal with Goldman Sachs and Russian investor Digital Sky. Now, when you look at that $500 million stake, it values the whole company of Facebook at $50 billion, which is a lot of money, especially when you question what the company actually does for the economy. Is it worth it? Here to discuss, Lou Kerner, Wedbush Securities social media analyst, and Jeff Sout of Raymond James. He's the chief investment strategist there. Lou Kerner, you first. You think far from being worried with $50 billion, it may not be high enough.
Well, right. I think Facebook is the most transformational media company of our day. And obviously investors in the private marketplace are already placing a value at over $60 billion. So Goldman seems to be getting a nice discount here. And we think that if Facebook were public, that it would probably trade close to $100 billion in value.
Okay, so $100 billion, higher and higher. Jeff Sout, let me throw this screen up before I get your reaction to that number. And the screen shows this. Facebook employs about 2,000 Americans. Boeing employs about 159,000 employees. And why do I pick Boeing? Because according to today's valuation of $50 billion, Facebook is bigger than Boeing. And if Lou is right, it will be twice as big as Boeing. Boeing makes 75% of the world's commercial airplanes. Am I wrong to sort of have my head spinning on that?
I don't think so, Aaron. If the only public social networking company I know of is QPSA, QPSA, and if you value that as a comp to Facebook, it means that Facebook needs to be doing $5.4 billion in revenues to maintain a $50 billion valuation. They're not doing that right now. So I don't understand valuations of that. Doesn't mean you can't make money in them. I think it was George Soros that said you can make a lot of money by riding a bubble as long as you remember to step off before it bursts.
What do you think about that, Lou Kerner? I mean, you're saying worth $100 billion, but I didn't directly ask you whether you think that would be a bubble-like scenario.
Well, sure. Well, look, nobody's buying Facebook based on the revenue that it's generating today, or even based on next year. When we think about values for Facebook, we look out to 2015. And if you think about how much time people are spending on Facebook in the U.S. and in many countries around the world, they're already spending more than 25% of their internet time on Facebook, and that number is still continuing to grow. And if you think about media companies, they tend to get outsized share. Media companies with scale get outsized share of spend. So even if Facebook gets just 20% of internet ad spend in 2015, that alone would put them at over $20 billion in revenue. And we think that there are a lot of other revenue opportunities, most notably in Facebook credits, that could push the total revenue above $30 billion in 2015, at which point even a $100 billion valuation might seem very attractive.
Jeff, what do you make of that? And I guess of this broader thing where, we sort of bemoan the decline of U.S. manufacturing, which certainly has happened, although we're still the world's biggest manufacturer. Should we be championing the rise of intellectually driven companies like Facebook, even though, as those numbers showed, as successful as it may be, it doesn't employ very many people?
Well, a lot of people would argue that it's a new business model as the economy shifts from manufacturing to service-based and intellectual capital-based models. I can't help but recall the same type of arguments, Aaron, that we heard about eyeball views per minute back in the late 1990s. I would think if Facebook came public right now, I think it would surely trade higher. But I think it's eventually a bubble, and I doubt the 2015 figures.
Lou, what do you make of this? I mean, to the point here, you've got 500 million users, and we don't know how sticky it is, I guess, to use an internet bubble term, right? I mean, how many of them are going to use it regularly, and how much of that can be, quote unquote, monetized, right? Turned into to real revenue. How do you get your mind around that challenging question? Well,
again, I think we get very comfortable with time spent as being a great metric, and to the degree it's over 25% of time spent. We think that there is tremendous monetization opportunity for Facebook. We also know that brands love advertising on Facebook. They're getting great returns on the spend on Facebook today. We do a bi-monthly survey of Facebook users, and we think they just passed the milestone of more than half of the users in the U.S. over 18 have now fanned or liked a brand, and that gives brands a great opportunity to communicate with users. So, we certainly appreciate that kind of eyeballs and companies that had no business models in the late 1990s getting astronomical valuations. But we don't think that there's a bubble at all today in companies like Facebook, like Twitter, like LinkedIn that are amassing huge audiences and have great monetization potential.
All right, Lou, Jeff, thank you very much. We appreciate it.